Well, the excitement just never ends. We've certainly had quite the week, and I suspect that the weeks ahead are going to be plenty exciting also. We do have earnings report on Tuesday. Then we have the PCE on Friday. And then we have erratic programming, which I'll talk about in a minute, all through the week, but I'll promise you that I'll be here for the most important stuff. Anyway, let's dig into what's going on right now. First of all, I saw this post and I like the take. I don't know if it's true. I don't even, we have to acknowledge it's just speculation, but I thought it was worth sharing. It is from Sasha Yanshin. Goes under the handle on X of Sasha Yanshin, just like that, all spelled out Yanshin if you want to follow this person. So, do you know why stuff is suddenly happening at Tesla? Prices actively changing. FSD releases coming every 10 days. Restructuring and dead wood being removed. A lot of speculation about whether this was a dead wood move, whether this was a repositioning move, whether this Jeff Lutz thinks it was very strategic. I'm thinking that there was probably plenty of all three. All right. He goes on to say, Sachet goes on to say, Elon is back in the house and he is pissed off. While he was fixing other priorities, some senior execs took their eye off the ball. Others were pressing in the wrong direction in spite of an agreed upon strategy. The culling wasn't a coincidence. Canceling the India trip wasn't a coincidence. The sudden surge in FSD progress is not a coincidence either. There are few things better than a pissed off, hyper-focused Elon with his back against the wall. Maybe this is the kick in the nuts that unleashes Elon. Stock up on the popcorn. Okay, number one. I do not think that Elon is, to use his phrase, pissed off. I think Elon is focused. I think Elon saw the some opportunities as well as some problems, and he is now focused on those issues. I don't think he needs the kind of motivation that comes from being angry or ticked off or whatever. Anyway, I do think that some senior execs might have taken their eye off the ball. There's a lot of speculation as to why those changes were made. But we don't need it to be about failures on their part in order to understand why it could have happened. The culling wasn't a coincidence. Okay. Canceling the India trip wasn't a coincidence. I can buy that. Sudden surge in FSD progress. That's not a coincidence. I think that is, and it might be partially because of Elon being focused like a laser. But anyway, so we'll see. We'll see what happens. So I also believe that Elon is transparent about most of his thinking and the ways he thinks. So for those of you who wonder what is underlying his decisions to cut the prices, excuse me, so much, here is the part of that process in his own words on X. He says, other cars change prices constantly and often by wide margins via dealer markups and manufacturing/dealer incentives. Only a fool thinks the MSRP is the real price on any given car at any given time. He didn't say the last part, I added that. Tesla prices must change frequently in order to match the production with the demand. Now, I think that this is where part of what he thinks, okay? Matching the production to the demand, part of what he thinks. Part of what he thinks is where's the market headed? Where's the economy headed? Part of what he thinks is what's happening with the other cars that are what he would call possibly the closest competition. I think every good marketer, every good manufacturer thinks about those things when they're making pricing decisions. In a lot of industries, you set a price for a year, most years, and then you set the next price for the next year. But lots of industries change prices every single day. Commodities, for instance. Anyway, there's what Elon is saying in his own words. This is from Ed Ludlow, and Ed Ludlow is he's a writer for Bloomberg, for the Bloomberg papers. So Ed Ludlow says, some other longer-term things I've learned about Robotaxi in particular. Again, we don't know, this is probably speculative, but here's what he thinks he knows. There's a small number of highly promising and viable Robotaxi-specific FSD neural nets in development. So you know what the neural nets are. So this would suggest that these are robotaxi specific. I don't quite understand that unless it's robotaxi specific from the standpoint of the locations of the cameras on the final version that they probably already know exactly where all the cameras are going to go on the robotaxi. He doesn't say if that's what he means, but I don't think that the robotaxi FSD is going to be different than the regular FSD for consumer cars. Um, yeah, I don't know what the difference would be. So I can only think he's talking about the location of the cameras because we know we still don't have FSD on semi trucks. We still don't have FSD on cyber trucks because they need to be recalibrated for those vehicles. All right. He says that the Dojo-based data center in New York is getting close. I guess that means to having the final version. NVIDIA-based data center in Austin is proving expensive. Okay. All right. Elon first tasked the software team to look at the robotaxi-specific architecture of FSD in foundation models in 2019. The barriers to progress were Dojo being behind schedule. The hope was production by June of 22, but it hit July 2023. GPU supply and compute constraints also held back FSD progress, but Dojo did to some extent unlock that. The innovations that mattered in FSD software, that is the end-to-end, no C+ control code, that's been the key to unlocking a generation of software that could realistically power a robotaxi. My understanding, meaning his understanding, not mine, is that the promising neural networks are quite a secret that only a few folks have access to, but from a software perspective, because they'll have to plan and build specific hardware spec for robotaxi, Tesla is making progress. All right. I don't know, again, don't know how much of that is fact, but we have it from somebody who does do this for a living. All right. This is Randy Kirk. I want to give you some housekeeping. The next 3 weeks are going to be hectic. I'm going to be on the road all over the Northeast on vacation, but I don't take a real vacation because of the program and because of my clients. So, but we'll be taking more of a vacation than normal. All right. So here's my plan. There will be an After the Bell tomorrow morning. There will be one Tuesday. There'll be one Wednesday. Probably not one on Thursday. And the ones that I do on Monday, Tuesday, and Wednesday might be late. They might not be late. It's not really clear to me. It's really going to be hard to figure out exactly how to get these done, but I will get them done. Thursday, probably not. I'm on an airplane on Thursday. I'm not sure I'm going to be able to pull it off. We'll see. Maybe I will. I will always try to have an After the Bell. That will be my highest priority, will be the first thing in the morning to do that show. There will be Brian White tomorrow and Tuesday, although maybe that Tuesday show will be moved to Wednesday. I'm not sure. Probably late. Who knows what time? Probably around noon, 1 o'clock, like normal. There will be a Good News Monday tomorrow night. That will probably be late. There will be absolutely be a report immediately after the earnings call. All right. Whatever time that ends, there will be a show that I will start then. And about an hour later, you'll have it to view. And I'll try to have at least one show every day, but Thursday is not likely. So we'll see how that all works out. All right, please go down and sign up for Patreon if you haven't done that already. It'd be really nice of you. And then, of course, like, subscribe, and notify so you hear about all those shows. I definitely want to do a show this week with Scott Walter. I know he's got some cool stuff lined up. I definitely want to do I want to do all the shows, but it's probably not going to be possible every day over the next few weeks. All right. From Kobesi, I thought this was very interesting. He says we've talked about this over the last week, but he brings some stats to it that I didn't have before. Central banks are stocking up on gold. That's what I've been telling you. Since 2022, China has bought a record 290 tons of gold. Last year alone, China acquired more than 225 tons of the metal. So out of that 290 tons, 225 of it was just last year. China's central bank increased its gold holding for 17 straight months. In addition to that, he should mention this because it's such an obvious addition, is China consumers are also buying gold. Their real estate has collapsed and they're buying gold. By the way, Americans are also at Walmart, at Costco. You may have heard about that. In 22 and 23, world central banks bought 1,081 and 1,031 tons of gold, respectively. Prior to 2022, there was never a year in history with 1,000 plus tons of central bank gold purchases. He's wondering, and again, take this analysis for what it's worth. Have central banks lost faith in their own currencies? I don't think that's the reason, but who knows? That might be. All right, let's go on. What we got coming up this next week? Well, I already mentioned one thing, but let's talk about what else is coming up on nothing on Monday. Nothing's coming out on Monday. On Tuesday, you've got the S&P Flash U.S. Services PMI. That will be on Monday, along with the manufacturing PMI and new home sales. All three of those coming out on Tuesday, rather, along with the Tuesday earnings report. I will try to report on these at the same time that I report on the earnings report. We'll see how that works out. On Wednesday, you've got durable goods orders. You got durable goods minus transportation. Those will both be early in the morning. Again, I have no idea when I'll report on those. I'll do my best to get there. Let's go back, see what, on S&P Flash, they're expecting that to be up to 52 from 51.7. Both of them at 52, both of those up slightly. New home sales expected to be 670,000 from 662,000, so a slight increase there as well. That would make sense. It's at that time of year. Durable goods orders expected to be 2.8% up versus 1.3% last month. Interesting to see if this is true, durable goods continuing to go up very, very well. Durable goods minus transportation, no guess on that one. On Thursday, we're going to get the GDP. That's expected to be only 2.2% versus last quarter's 3.4%. This is very much reported. Who knows what it's actually going to be, but we will all certainly want to know that number on Thursday. Initial jobless claims expect to come just a tad higher, but they're never even close on this anymore, except that it's always the same week after week after week. There's been some speculation recently about this number being so close to the same for 5 or 6 weeks in a row, really calling into question whether the numbers we're getting are correct. We have got the advanced U.S. trade balance coming in also on Thursday. Retail inventories coming in on Thursday. Wholesale inventories and pending home sales expected to be flat at 1.6. Oh, after 1.6% up last month, expect to be flat this month on pending home sales. That would seem odd. That would seem like we should be pending home sales going up. So we'll see. But again, Thursday, maybe there'll be a very late reporting. Maybe no reporting at all on Thursday. If I miss all that reporting on Thursday, I will try to do it first thing Friday morning. All right. Friday, we have the PCE. We have the year over year, et cetera, et cetera. We also have the personal income and personal spending reports that comes out of that same report. I will try to report on that Friday morning, along with consumer sentiment. Okay, what we're expecting. And remember, these numbers are fairly accurate usually in terms of the expectations, because they already have the CPI and the PPI, and most of the numbers can be derived if you know those two things, plus some other things that are known. So these numbers are scary. So personal income up 0.5%. That would be 6% annualized. Personal spending up 0.6% after being up 0.8% last month. That would be 7.2% in spending. If the consumer is spending that much, that kind of spending, they're going to run out of money. It's just a matter of time. PCE index expected to be up 0.3% again. Not close to what the Fed is hoping for. PCE year over year, 2.6%. Core, 0.3% as it was last month. Again, not what the Fed is looking for. And year over year, 2.7. So what we're seeing here is if the PCE comes in this way, we are seeing it moving in the wrong way compared to what it had been. Consumer sentiment then comes in at 10 o'clock that morning. And they're expecting that to be even with last month at 77.9, which would not be a great number. All right. So that is what we're expecting in terms of all the reporting this week. We have other bunches of earnings reports. My guess is that I will barely be able to it's going to be very unlikely that I'm going to be able to really stay ahead of all the earnings report. I might throw them in as they come along to the extent I think that they're important to what's going on in the markets. Okay, what about tomorrow morning? Well, I think there's a fairly large chance that Tesla's down. I don't think that the markets are going to get it. They're not going to get what Elon's doing. They're not going to get the transition. They're not going to get that we just raised the price by $1,000. So dropping the price by 2,000 is only really a net $1,000 decrease. They're not going to, there's a whole bunch. They're not going to get that. Probably the margins are going to come in stronger than expected because every quarter they seem to be able to trim off about 2% on cost of goods. They're not going to get any of that. What they're going to be, and they're not going to be paying any attention to Robotaxis or Optimus or Dojo or any of those things long term. So probably there's going to be another hit on Monday. Unlikely to see that improve on Tuesday, and then after the market, after Elon and the crew come in and do their earnings analysis. If Elon can convince the street about what's going to happen next, even if I believe that the key is going to be, yes, there will be on 8/8, we are going to show you a car. We're going to show you a physical car. And if you would add to that the Model 2, the next gen retail vehicle, the $25,000 vehicle, whatever you want to call it, that is still going to happen, although it might be 3 months or 6 months after the Robotaxi. I think that would cool off some folks that are worried about it. But it could be a rough week. And then you add the PCE in. I don't think that's going to help the markets. So I do believe we will be down somewhere, probably this week. We're going to be down 10% from the all-time highs in the equity markets. And I do believe it's going to be a rough week for Tesla. I'm not selling anything. And don't take it as an investment advice. That is just what I think is going to happen this week. I could be completely wrong. It could be a time for a lot of bargain hunting on many fronts, especially NVIDIA. After being so down 20%, we could see strong purchasing on NVIDIA tomorrow morning because of the profit taking. Okay, let's now take a look at where we are in the markets tonight and what is happening in the pre-market on Sunday night. Let's go ahead and look. And let's start with those bonds. We've got the, let's see if we hit this again. There we go. So the 10-year is up 3.7. That is 3.7%, 3.7 basis points. Let me get it right, 3.7 basis points. That is probably because the PCE predictions have come out, and that's probably why it's up 3.5 basis points. We've got the 2-year up about the same, 3.7. We've got the 2-month up 2.1%. So across the board, bonds are falling and yields are going up. And I just gave you what I think the reason is. Okay, because that would mean, we're getting to the point where I think people understand there's not going to be a cut in the interest rates this year, or without listen, so many things could change, by June. So many things could change by June. So maybe there still will be one. All right, let's go ahead and look at oil. Oil is down 13 cents right now, sitting at 83. We've got Brent at 86.87, so very far off of that recent high of 90. So things seem, I guess, calm internationally right now. Natural gas up a little bit, 175.5 in the pre-market. Gold down 16, under 2,400 again, but still, really, really strong. Silver down a tad also. Copper up a bit, 0.42% at 451. We are marching towards that 475. Remember, that is the all-time high on copper. What does that even mean? I can't get straight answers. I can't find anybody to support my theory that this is all about the data centers, but I'm going to keep looking. Okay, so what do we got in terms of the dollar? The dollar is pretty much flat in the pre-market. We have got the Bitcoin up, call it flat. It's sitting at 65 roughly, and the halving has been completed now, and we're seeing almost no action. The one thing everybody was sure of that would happen after the halving was complete was volatility, but that doesn't seem to be happening, at least so far, early days. All right, equities, the Dow is up 96 or 0.25%. S&P futures up 11 or 0.23%, and the NASDAQ futures up 50 are 0.30%. So pretty much roughly in the same ballpark in terms of being up 25 to 30%. I mean, 0.25 to 0.30%. All right, so that's where we're standing as we leave Sunday night and go into Monday morning. I will be, as I said, I'll be back tomorrow morning at probably something close to normal time. Okay, that's the best I can say for now. It has been great, as always, talking to you.